Coming to you from the Tar Heel State, this is the Carolina Commercial Real Estate Connection, bringing you industry insights and hot takes from Carolina real estate experts, helping you begin, grow, and scale your commercial real estate portfolio. And now your hosts, Tony Johnson and Cameron Pearson.
Welcome to another episode of Carolina Commercial Real Estate Connection. Today we have Greg Dickerson on the show. Greg's a serial entrepreneur. He is a business coach and hosts podcast episodes, discusses economics, does a bunch of different things. Greg, welcome to the show.
Hey, Tony, thanks for having me.
Hey, Greg, can you give the listeners just a little background on yourself to get started?
Yeah. Like you said, I'm a serial entrepreneur, real estate investor, and developer. I am a natural born entrepreneur, starting as a little kid, knocking on doors, going around making money however I could. If I needed something, my dad would not give me money. He said, you need to figure out a way to go make the money to pay for it. So I learned at a young age, the way you make money is to solve problems. Where there's problems, there's opportunities. So I joined the Navy right out of high school, did not go to college. I have no formal education. I did retail in the Navy, so I did get some business training. We took care of all the ship stores and vending machines and laundromat and barbershop, things like that. So I got a little bit of training there in terms of, basic accounting. When I got out of the Navy, the only two things I'd ever done prior to that were, in addition to my entrepreneurial endeavors, just being handy and doing different things. I worked in the restaurant industry, got a job making and delivering pizzas when I was in high school. And so I took a love for the restaurant industry. So, and I also did construction on the side. So the only two things I ever did after the military were restaurants and constructions. I was always, managing restaurants, and I had a little construction business on the side. In 1997, I moved to the Outer Banks of North Carolina, a little bit north of you guys. And I started a little remodeling handyman company. I actually moved there to open a restaurant. I worked in the restaurant industry there, for one season. In 1997, I started a little remodeling handyman company. I did $250,000 in revenues my first year. And 7 years later, it was a $30 million building company. I was one of the largest builder developers in the area. I started 12 other companies along the way, kind of ancillary to the construction industry, but I did have some restaurants, and I did have a gymnastics trampoline cheerleading school as well. That was more of a community passion project. And again, I started with absolutely nothing. Nobody in my family were entrepreneurs. My dad was 20 years, career military, then retired and did civil service after that. My mom was 30, 40 years with Blue Cross Blue Shield. And, I just used the cash flow from all of my businesses to invest in the real estate deals. So during that 7 years, starting all those companies and, my big construction company, I sold it in 0405 at the peak, sold all my properties. But what I did was I took the cash flow from those companies that I had, and I started with a lot flip. Then I started building little spec houses. I was renovating houses. Then I started getting into commercial, started doing land development, and just kind of scaled everything from there. So, that's kind of my long story short. And, now I'm in the markets. I'm in crypto. I wasn't in the markets till the bottom of 2009. That's when I got in the markets for the first time. And, so I've been, in and out of the markets ever since then. Made a big play in the bottom of 2020. And, now I've been kind of making some moves in and out here, while the market's been ranging and doing its thing here over the last year or so. And, from a real estate standpoint, I exited all of my positions in real estate, prior to or just after the pandemic during that time period. So, I'm kind of on, in terms of a real estate standpoint, watching the market, watching things play out. Interest rates have shot up so high that, values are adjusting very quickly. In, the commercial market specifically, the housing market is still, pretty robust. Every area is different, real estate's hyper local, but so that's kind of my long story short.
That's awesome. Yeah, that's a great story. So let's find out a little bit now. Along the way, I didn't hear where we got into what I feel like is you offer the most value right now to people is you're doing coaching. You're doing business coaching to individuals. Excuse me. How did that get started? Could you give us a little background on that?
Yeah, individuals and companies, so I coach people all around the world, mostly inside the United States, but I do have some people outside the United States that I coach and mentor. Some people, teaching them how to be a real estate developer, how to grow and scale their companies. I have contractors like you that I'm helping, scale their business as well as do, other deals and investments. And I have people that I'm just helping them grow their company from, recruiting, hiring, training, leading, delegating, motivating. How do you become an effective leader and manager? How do you scale your business? Who are the people that you need, the systems and procedures and things like that. And also, I forgot to mention, I'm a co-founder in a tech startup as well. So I still do equity capital. I like to buy companies and build them up, scale them. That'll probably we're targeting $1 billion valuation when that goes public. So that's pretty exciting. But yeah, as far as coaching and mentoring, it's what I've done my whole life. So during that period when I was building all my companies and doing those things from that 97 to 2004 or 5, when I had my first big exit, I was also a leader in the community. I was on the board of pretty much everything, all the community foundations. I was a leader in my church, taught Sunday school. I coached all my kids' sports. I had 3 girls, and I coached all their sports all year round growing up. So I was very active in the community, but, I also was home every night for dinner. I had weekends off. I took 4 or 5 weeks off a year for vacation. And the way I was able to do that was because all of the different businesses, all of the different companies, and all the different ventures I was involved in, I was a coach. I was a leader, delegator, motivator. I coached other people. I found great people that led those companies, because I didn't run any one thing. Once I evolved after the first few years of my initial company, I didn't run the day-to-day of any company other than my building company. I was still the main person there. But, I had, even in that company, I had a president, vice president, chief financial officer, and, my CFO and my administrative assistant. They ran all of my other ventures and handled all the administrative side of that. But I had leaders in each of those businesses that ran those operations. And I just coached them, led them, and helped them build and scale those businesses. So that's kind of where it came from. When I was coming up, the way it would work is somebody would approach me that, either had a business or had an idea. Mostly the ones that I got involved with already had a business, and maybe they were struggling. One of them was a plumber. He was about to go out of business, and he was going to leave the area. He didn't want to, and he reached out to me, and I said, look, I'll buy the company. We'll scale it. And you can stay here and run the thing. So I bought his company. It was him. He had a helper. So there was 2 trucks at the time when I bought him out. He was doing, I don't know, a couple $100,000 a year. So I bought his company, paid off all his debts, immediately put 8 trucks on the road. We hired a bunch of mechanics from another company that was going out of business, and instantly went from $200,000 to $1 million a year the first year. And he became the largest plumbing outfit on the Outer Banks. And they're still there. And, we were doing new construction, service work, all that. I did the same thing with electrical company, painting company, storm shutter company, pool spa, landscaping. Had a guy that was working for a pool and spa company that was selling me pools and spas for all the houses I was building, 30 or 40 of them a year, $1 million beach houses. And he came to me and he said, look, we can start a company together. You can buy these things direct, save a bunch of money, and we can have this enterprise and, combine the 3 things that, the 3 separate phone calls. As a builder of luxury oceanfront, beach houses, I had to have a separate contractor for the pool, separate contractor for, the hot tub. Then I had to have somebody to come in and do all the landscaping and, the whole, the fencing and this and that around the pool and play sets and all the different things for the outdoor environment. So I said, why don't we create a company that combines all of that? So it was pool, spas, and landscaping. So it was the complete outdoor experience. So that as a general contractor, you had 1 phone call to make. We handled everything turnkey, or homeowner for that matter as well. So, we scaled that company, but he was an employee, the general manager for a company for like 8 or 10 years, for this pool and spa company. So he came to me and, we came up with the brand and the concept and the idea. And we bought a commercial building on a 40-year owner finance deal to put the company in. That was a killer deal. And, scaled that thing, and, they're still there to this day. And, so that's how I got into it. I just was coaching, people in these other businesses that either had a company that had potential, or they were working somewhere and they wanted to start something. They would come to me and I would, either joint venture with them, or I'd buy the company, build it up, either sell it back to them or sell it off in general. And, fast forward here 20 years later, people started reaching out to me, because I was on some podcasts and things like that, asking me to coach them. And I said, well, I've never done that as a business, so this was, I don't know, 3 or 4 years ago. And they said, well, shoot, I'll pay you, help me do this. This is my issue. This is what I'm trying to do. So I started coaching people, and, I've had a lot of success with people. They're all on my website, the testimonials of people and the results that they're getting and what they've achieved. So, I've made that a focus in a business to kind of give back and share everything I've learned over the past, 30 years, doing all the different businesses, all the different real estate deals, how to really grow and scale a company, and, helping people go from, 0 to 100 million in assets, 100 million to $1 billion in assets. People that, like a mutual friend of ours, Ben, he got his real estate license, never done a deal before, didn't really know a whole lot about real estate. And I helped him, he had no money. I helped him do his first deal. It was a subject to, it was a flip. So he took the house down on subject to. I showed him how to get the money to do the renovations without having to use any of his own money. He ended up flipping that house, made 60, 70 grand in like 90 days or 120 days on his first deal. Went on to make over 100,000 or more that first year. And, now he's off to the races. So, it's really a lot of fun. And, I've got one couple that they were flipping houses for 6 years before I met them, never made more than a couple $100,000 a year flipping houses. She was a realtor and he was, doing all the work in terms of managing the contractors and all that. So I helped them in their first year working with me. Again, they never made more than a couple $100,000 in 6 years of doing this. Their first year with me, they made 1.3 million. So that's exciting. That's the kind of stuff I love to do. And, it's a lot of fun. So, that's kind of how I got into it.
Yeah, one thing I can say just from personal experience in dealing with you, Greg, is you make what normal business owners feel is complex, and you get in these binds and you get on the phone with you and just make it seem so simple where I'm like, oh, well, why am I even asking you this? But you really break it down and simplify it where, as business owners, a lot of times you overthink things, you overanalyze things, you get caught in the weeds of the day-to-day operations. And, just stepping back and being able to coach people up and, delegate things off to people is difficult. But in order for the business to scale, like you're saying, you really have to be able to do that. And finding somebody like you is extremely helpful for somebody that's really wanting to take the next step in their business with their career. So I appreciate what you've done, and thanks for that background. What I'd like to jump into, one thing that you mentioned that I don't know anything about, and I've never heard you mention before, is this 40-year owner finance deal that you just brought up. So could you run us through that deal and kind of the structure, how you set that up and how it came about?
Yeah, so it was a commercial building that we found that I can't remember if it was for sale or if it was a relationship. Yeah, I can't remember how the deal came about, but there was this couple, elderly couple, they had this building and it was their retirement. And, they wanted to sell it, but they wanted to have steady income. They didn't want to pay the capital gains on it. So we approached them and we said, okay, well, the way we can do that is you can do an owner finance. And we just ended up negotiating the terms. And I mean, I don't even remember how much we put down, but it wasn't much, maybe 5% down. And then we just did a 40-year amortization and, paid them out over 40 years because they wanted that income and there was no balloon. I mean, it was a 40-year amortization and they were older. So I don't think they were, planning on living 40 years. I think they, wanted to pass that along to their estate. It's kind of, the whole deal. So, I mean, you just never know. And it was one of those buildings that was run down. They hadn't put any money into it. It was a little strip center. I don't know. It might've been 5,000 or 7,000 square feet. I can't remember, but it was 3 or 4 different spaces at the time. We wanted to put the pool and spa company in one end and, we were going to put some other tenants in the other end. And I think we ended up taking over the whole building eventually, but, yeah, I mean, I could have bought it. I could have paid cash. I can't remember. It might've been 250,000 or something, that we paid for it. It wasn't much, 250, 350, something like that. But it ultimately, after we took care of it and renovated and everything, it ended up being worth over $1 million, in about 2 or 3 years.
Oh, wow. Yeah, that's great. Now,
so it's just by asking the question, so maybe it was for sale. I can't remember. And, we said, what's your goal? Do you want cash? I think they may have even brought it up and said, we'd rather finance it. And I think that's why we ended up getting the deal because other people didn't want to do the under financing for whatever reason. And we're like, and they wanted that 40-year loan. And that was a long time ago. Yeah. I can't remember all the details around it. But they wanted that specifically. Other buyers didn't want to do that. They wanted to, use their own financing. So we went ahead and did the deal. I mean, interest rate was cheap. So this was probably 2001, probably 2000, 2001. So, interest rates at the bank would have been probably 7% for something like that at the time. So yeah, I just can't remember all the details. It was a long time ago, but yeah, that was a pretty cool deal.
And that's all about the find. So as like you said, the source of that would have been key, and then asking the right questions when you get there. So
Yeah,
that's
really
cool.
understanding their needs and, pain point. They don't want to pay the big taxes. As long as you can find those right people in the rundown building, which right now with the tight inventory, those are extremely hard to find around here for sure, where we are in Wilmington, North Carolina. Something else I wanted to jump to that you do a lot, and I think you have a pretty avid following too, is you do updates on the crypto market and the stock market. Could you tell us a little bit how you got into that and, what you typically are doing on that?
Yeah, so that all came. So like I said, I've been following the market. So all the way back to 2000, 2001, there were a lot of people that were made a lot of money in the markets before the dot-com bubble and bust, and were coming down to the Outer Banks and buying beach houses, or they were using money they made in the markets to renovate their beach houses. So the whole thing was these houses were built on pilings, on the coast, and generally they didn't close in the ground floor. So they would hire us to come in and close in the ground floor and put in a rec room and a bedroom and put a pool in the backyard, and that would bump their income by as much as 100 grand a year on some of those houses. Could be 30, 50 to 100 grand a year. Just a pool alone would generate 20 to 30,000 a year in income. So, I was asking questions. I was never in the markets, didn't really know anything about the stock markets until those people were coming down. I'm like, how'd you make your money? Because I always would ask everybody, whoever hired me to do something, I would ask them how they made their money. And, others were, entrepreneurs, real estate developers. And so there was a number of different types of people, but the ones that intrigued me the most were the ones that were in the markets. They're like, oh yeah, I made a ton of money. I bought, whatever it was at the time. I don't even remember, Amazon or Microsoft, whatever, probably Microsoft. And they're like, I bought all this, bought this stock and it just made all this money and I cashed out. And, so I'm like, well, how did you know it was a tie? How did you know when to cash out? They're like, look, this thing's just going up and up and up, and we're starting to see some weakness. And we just figured it'd be a good time to get out and take some profits. And they just happened to catch it right at the right time. So I kind of started following and learning a little bit about the markets there. And it wasn't until 2009 that I really jumped into the markets. And I had a good friend of mine that owns a pancake house on the Outer Banks. It's kind of an iconic pancake house in Kitty Hawk. And he used to be on Wall Street. And he, cashed in the Wall Street job and, moved there and just was running a pancake house and surfing. We were surfing buddies. And he told me when the markets were tanking, I was watching all that. Of course, I was in real estate. I had $30-40 million, in construction loans waiting for permanent financing from Lehman Brothers. They were my lender, on my permanent takeouts for all my construction loans that I had going at the time. I had some commercial stuff too that were local banks. So I had all this stuff going pre-October 2009. All of a sudden, bam, I couldn't get the permanent financing. I had all these, houses I built. Thank goodness I had a business. I had cash and I had cash flow. So I was able to work through it and make it through. But I couldn't get any loans on these houses that I already had commitments for. Everything was built and done. So it was really interesting. It was Lehman Brothers, Bank of America. Those were my two big financiers, lending institutions. And then I had some local banks that I worked with that they ended up going out of business. So all of this was happening. And I was like, what the heck is going on? So I started talking to my buddy. He's like, dude, you need to come in here. We need to start trading. I'm going to teach you. They said, this is a generational opportunity. What's happening. So this was at the beginning of the fall of 2008-9 when the market started tanking. And I was in there every day. I'd go to the pancake house and me and him, we'd open the laptops and we would just log into TD Ameritrade and started playing around. And I just basically watched. And I remember at the bottom of 2009 in March, when the market finally bottomed and it looked like and felt like a good time to get in. So I went in and I bought Ford stock at like $1.90, Citibank at like $1.10. There was a bunch of different things I bought at the time. And that was my first entry into the market. So I started with like 30 grand or something, nothing huge. And that ended up making, a pretty good
snowballing. Yeah. When you're buying, the numbers you're spitting out, I can imagine that goes quite far.
Yeah, that did really well. And, that kind of, got me hooked. And I didn't really, follow it much. I just kind of kept it in there and the markets kind of, kept going and things like that. And I didn't pay as much attention as I wish I should have now looking back. At that time, I should have deployed everything I had. But at the time, it might have been 30 grand was, that was a very small percentage, maybe 5% of what I had at the time or something. I don't know. Not even that much really. But it was a good education. And I didn't really do much with the markets. I kept going, from that point, I kept doing the real estate thing and some other ventures and, doing other things, becoming more of a developer. After 2009, I didn't self-perform anymore. I started hiring builders, to work for me. And I was doing some stuff with some other companies. And then, fast forward here to 2021. So what was happening in 2021, so I started following the crypto markets in like 2015, 2016, didn't really do anything with it. One of my painters that was working for me, I saw him at a restaurant one day. I was out for lunch. Hey, how's it going? He's going good. I'm like, how's business? He said, I'm retiring. I'm like, you're retiring? He says, yeah, Bitcoin. And he showed me his Coinbase account, and he had like $800,000 in Bitcoin at the time. I'm like, what the heck is a Bitcoin? He said, dude, I put like $1,000 in. Now I've got like $800,000. I was like, what? And, I'm like, this just can't be real. Right. So I started, looking at it and following it. And I didn't really dig into it deeply because, it was just so up and down. I was like, yeah, I'm not really interested in that. I was more interested in stocks. So I really started learning, educating, and studying and following the crypto markets all the way up till, to the point of the pandemic, pre-pandemic. And then I watched the markets fall off a cliff. And I'll remember, I was sitting in an auto dealership waiting for my car to get serviced and, sitting in a little office there. And I was watching the markets and watching crypto and all that, during March of, 2020. And again, it's funny, March of 2020 being the bottom and March of 2009 being the bottom, so I was kind of like reliving that whole thing. And I remember looking at my thing, okay, what am I going to buy? What am I going to buy? And I was watching Bitcoin go down, it had been like, 20 something $1,000 or whatever. And it went all the way down to 4,000 again. And, stocks were dropping and tanking. So, I made some moves on Bitcoin at that time, made some moves on some stocks. And then I just watched everything that happened with the Fed coming in, just like 2009. They came in with QE, started injecting capital in the markets. The same thing happened, a little different this time. They weren't like, they weren't loaning money to banks and propping banks and all that up, but they were just injecting, capital and doing different things this time. And then I just watched everything go parabolic. And then, you started to hear, inflation becoming a problem, the Fed talking about tightening and all that around the fall of 2021. So my Thanksgiving, it was really funny because Thanksgiving the years prior, everybody was talking about crypto. Everybody's talking about Bitcoin. Everybody's talking about stocks. Oh man, you got to buy this, you got to buy that. Well, at my Thanksgiving of 2021, I was telling my family, it's time to sell. It's time to get out. And I've got all my YouTube videos where I'm telling people and warning people, it's time to sell. It's time to get out. So that's kind of why I started making YouTube videos about the crypto space and about the markets, because everybody was like, it's going up, it's going up. And I'm like, this just isn't right. It's time to sell, it's time to take some profit. So I started putting out, my information on the markets and things and doing updates. And then I've just been kind of following it, ever since. But, it's been pretty fascinating watching from those pandemic lows to that, 2021 highs, to again, we saw lows in October. And then we've had a big bounce back since October. And we're still kind of in a really, interesting area right now where markets, are at a critical level to where, they're either going to roll over and, we're going to see some damage, or, they're going to go back and recheck these, all-time highs and maybe set some new highs, while the Fed is still tightening and things, because the economy is so strong. We've got strong job market. People are still spending money, even though the Fed's hiked as much as they have, it hasn't seemed to damage the economy like a lot of people thought it would and create a recession. Like a lot of people were calling for a recession, and it just hasn't happened yet. In fact, the economy grew a little bit. So this has been a very fascinating time when you look at where we are from an inflation standpoint, with a strong labor market, stronger than we've ever seen. We've never seen 3 or 4 jobs for every person, looking. I mean, it's still a very unhealthy, unbalanced labor market, which is driving wages, which is driving inflation. Through the pandemic, what a lot of companies, a lot of businesses learned was we can produce less and make more. So now that's keeping demand, what's keeping supply constricted and keeping demand high, in a lot of
They're
areas.
making more money producing less.
Yeah. And then the housing market, with what happened with low interest rates and things like that, and the work from home environment and the way the world has changed, we've never seen a housing market like this before, where there's absolutely no inventory. I mean, it's always been the other way around, where you get oversupplied and overbuilt. I think the last time we saw, a constriction on supply in housing was probably, after World War II, in the 1940s, where everybody came home from the war and they wanted to have houses, and, going through the baby boom and all that. We've never seen a time like this where we haven't had any inventory in the housing market. We've seen it in commercial, where you've had lack of inventory in commercial for different things. And we've gone through booms and busts there because of that supply, oversupply, lack of supply, But right now with the housing market, I mean, it's an incredible thing that we're seeing. And we're seeing, a little bit of loosening here and there, but with rates as low as they were for as long as they were, and the Fed continuing to buy mortgage-backed securities, it just kept such a tight, constriction on the housing market that, it's really a phenomenon that we've never seen. And it's going to be very interesting to see if it can correct.
That was going to be my question, is sustainability. When you talk about these things, there's got to be a tipping point at some time, as far as it becomes unaffordable. What's your thought there?
Well, you think it would. So the key is builders, right? So we need to, we need more supply. And the only two ways you get that is people selling, or you get builders building. And in order for people to sell, they need a reason, right? You need a motivated seller. Either they're in distress or they're moving or whatever. Well, moving has been kind of taken off the table. Distress has been kind of taken off the table because everybody refinanced. I mean, 90% of the mortgages, you're in the business, are below 4%, probably 70% are below 3%. I mean, it's incredible. And you've got strong borrowers, put down good down payments, things like that. So there's people that are, locked into those low mortgage rates. I know a lot of people debate the mortgage rate lockdown thing, but it's real. I mean, there are people that aren't going to sell right now or anytime soon because, they're faced with, well, if I sell now, I've got this great mortgage, this great payment. I can't buy half the house I'm in now for the same amount of money a month if I try to sell. And where I want to go, there's no inventory anyways, to choose from. So I might as well just stay where I'm at. So it's a very interesting time. So the only thing that's going to change that is interest rates continuing to stay above 7% in the mortgage market. We haven't really seen that. It's only been a couple of months that rates were, managed to stay above 7%. And every time we get up there, it contracts. And, if we have an event in the markets and the economy, rates are going to come down. So that, that keeps pressure on the housing market. Builders right now, if we built all out, it would take 10 years to build through the demand in the market right now. I mean, there's only 1 million homes on the market for sale at any given time right now. Normally, we need twice that. And builders just can't deliver, enough units because there isn't enough labor. Because the labor market,
labor shortage is killing it.
Yeah,
everything is, half as fast, and the demand is so high. And with the tightening with the banks, it makes it difficult. The issue that I still am having a hard time grasping is with the rate increase, why it's so slow on driving the price down. So, sellers are still looking for, and people are still paying these elevated rates for things because of the low inventory. So the prices are not being driven down in a lot of these markets with the increased rate, where it really should be way down. You should drive that price way down, but it's just not happening.
Yeah. And again, real estate's hyper local. So every market's different. Your market's red hot right now. And, I was looking at a couple of things there because my daughter's in school there, and I was looking at a house that I was like, hey, I might buy this thing, and the realtor I called up on one, it looked like a great house near the university. And she said, oh yeah, we've already got 5 offers. It'll go for like 20% more than they're asking. I was just like, I'm not interested. So every market's different. You might see things changing in different markets, but to answer your question, you can still get interest only loans. So what people are banking on is rates are going to come down in the future. So the markets are banking on that. The Fed's going to, retract, and they're going to start lowering rates, as soon as the end of this year. Homeowners that are buying, the ones that are buying long-term mortgages at 7% are banking they're going to refinance. But most people aren't. Most people are either paying cash. I think in most markets, 40 to 60% of transactions are all cash. Then you have the other contingency that they're getting interest-only loans, and you can still get an interest-only loan in the 5s. And if you do a buy down with a builder, which a lot of people think you can only do buy downs in new construction, you can do buy downs or resales too. That's just the seller, buying the rate down. You just add to the purchase price, and the seller can buy the rate down. You can get a buy down in the 4s right now. With rates, as long as they're in that 7% range, you can get what's called a 3-2-1 buy down. You can be at 4.5%. So that's what's keeping pressure on prices, because it's still, you say affordable, but it's still manageable for a lot of those buyers, because you're still in the 4s and 5s with those, interest only options or buy downs.
Yeah. And I see that, but we've been on such a long run. It's hard to imagine when you look at a chart and we haven't, contracted at all. And we're on like a 12, 13 year growth straight up and to the right at this point. So at some point it has to contract. I mean, I don't see how it can't contract. I mean, if you can't just continually go up and to the right, I mean, can we? Is that even possible? I mean, it's never been done before.
Well, that's what I thought before 2008-9 is that, it's never coming down, and we all learned a big lesson there. But, you need a catalyst, and the only catalyst that's going to correct the housing market at scale, like you're talking about, is going to be some sort of an event where all of a sudden people need to sell. And we just don't have those conditions. People are still employed. I mean, so that's what it would take. It would take a severe recession where people are losing jobs at scale. And even then, it's going to take a while to work that through. There's so much demand that even if, so the narratives are the Airbnb market is struggling. So all these, houses are going to hit the market that were Airbnb and they're losing money. Okay, well, there's a million of them maybe. So if that happens, they would all get bought up.
Yeah, that's too small. But something
is.
something that I've been thinking about that could be a large scope, like we're talking about, that could hit in a year or so, is the amount of AI that's going out into the marketplace right now is just astonishing, and how quick it's being implemented by companies and how much companies are picking up. So it's going to give a quick bump. So some of these tech companies that were laying off are rehiring for the AI purpose, right? But in effect, the AI is going to eliminate so many white collar jobs. And if this really turns over and goes as quick as it's been going, and kind of domino effect, that could in a year or two create massive job loss for the AI taking people's jobs. Could that be a catalyst?
Potentially, in some regards, it enhances people's positions. In other areas, it can replace, and, some of the creative writing in the creative areas. But, those people at that level that are getting laid off, they become freelancers. And that's another thing that's happened. I mean, that's why the labor force, participation is down, is because a lot of people have money. They've made it in the markets. They've made it in their houses, and they pulled it out. They've made it in crypto. Other ones are freelancing. My mom, she's in her 70s, and she's freelancing for Blue Cross and Blue Shield, making more money than she can work anywhere else at her age, So, I mean, that's a real thing. So again, you need a contraction in the economy severe enough to where there just aren't any jobs, where, nobody is hiring. Not only are they laying off, but they're not hiring. People can't freelance because nobody's paying. We saw that a little bit in 08, 09, but the world has changed and we're global. That's the other thing that a lot of people are discounting. We are, a global economy. I work with people all around the world. And so do other people that are in that field in tech. They can work anywhere in the world with people anywhere in the world. The company that I'm a co-founder in, all our people are mostly in India. We've got some in the United States, but we have a big team in India. So this global connectivity, this global economy, global workforce that we have, it's so interconnected that it's just a whole different dichotomy. So you would need a severe contraction from a global standpoint that creates enough job loss to where people can't pay their mortgages. And even then, the other thing that's happening too is that didn't happen in 08, 09 is mortgage companies are doing workouts. So people that do get into distress that want to stay in their house, they can, there's a program out there right now, you can refinance on a 40-year mortgage and stay in your house and reduce your payment and put, whatever your deficiency is on the back end that you're behind right now. So, mortgage companies and lenders are working deals out now, whereas in 2008-9, they weren't. They were just, foreclosing or forcing short sales, doing that kind of stuff. Whereas now they're working that stuff out. We're seeing the same thing in the commercial market. So, it would take such a huge event to hit all at once. The only thing that could really do it would be rates would have to get well over 7% and stay there. You'd have to have massive job loss. And then the other thing it could do is World War III. You have World War III, everything's going to, start blowing up, and it's not going to matter anyways, if you have a massive situation,
right.
But just a general conflict, a conventional arms conflict, World War III, markets would, pair off, and, there would be, but then you would be shifted to manufacturing to support the war. So that could potentially be stimulative as well. So, those are really the only three things at this point that could really create, a severe enough contraction, because credit markets are a big thing too. So that would be the other thing. If financing dried up, that would really affect, the housing market as well. The two things that drive real estate are credit, the availability of credit and the cost of that credit, capital. That's what drives real estate deals in housing and commercial. It doesn't matter. How available is the credit and what is the cost of that credit? Right now, loans are still readily available. Pretty much anybody can get a loan with decent credit, and the rates are still reasonable when you get, these interest only and, short-term, interest only type options.
Yeah, they're just lowering the leverage ability is really the main thing that's changed. So yeah, that's understandable. Something else I wanted to get into, going back to the Bitcoin and that venue, the blockchain to me is a big opportunity. Have you done much research into the blockchain and how that could be used with real estate for deeds and stuff like that?
Yeah, so that's already going on. So real estate's extremely nuanced and difficult, for that to work. And, really all the blockchain is a ledger. That's a ledger out there that is maintained by computers all around the world that validates, records and validates transactions, and so that's really all that is. But in terms of what you're talking about, creating tokenized real estate or turning deeds into NFTs, that's already happening. There's a couple of companies, but one's called Proppy, and they are selling real estate as NFTs. So what they're doing is they're creating a company. They've got a company that manages all this, and they take that title and they create an LLC that owns the property, has the title, and they turn that into an NFT, and then they sell that, which is maintained on a blockchain type ledger. So that's already happening, but and typically it's been condos. There's been a couple of single family homes, but it's called Proppy, P-R-O-P-Y, that's doing that, but they're doing it as NFTs. NFTs are very different than like tokenization, which is what Bitcoin is. Bitcoin is a cryptocurrency. It's a token. It's not an altcoin, but it's a digital code. It's not a physical coin or anything like that. None of them are. They're all code. Whereas with a piece of real estate, it's very different because you have title, you have to have insurance, you've got property boundaries, you've got all these different nuances and aspects of it. It's extremely difficult to do it at scale. But I could see this technology streamlining the process, which is Proppy's goal. Is how do you streamline the process so that it's all in one place and you don't have to have all these different moving pieces and all the steps in the process of closing a piece of real estate. But that's a huge, heavy lift.
Interesting. Yeah. So now going back, what is the tech company that you are part founder of? Tell us a bit about that.
Yeah, so it's called Art Connect, and it's a technology. It's like a social media platform for the faith-based community, for churches, Christian schools, nonprofits, Christian nonprofits, to connect the world globally. So it's basically a Facebook for the Christian world, so that they don't have to face deplatform risks. They can own their data, things like that. So big tech, with ESG and all that, a lot of Christian organizations are getting kicked off platforms and being censored. So we're providing a, social media platform that's globally connected for those, faith-based entities, Christian organizations to have, where they can safely go and, interact, communicate, things like that. So literally our app, it's called Art Connect, looks literally like, Facebook in that regard. We didn't copy it or anything like that. We developed it ourselves. And then, the other component is an enterprise platform that takes all the technologies, for these organizations, like your business. You're using QuickBooks, you're using a CRM, you're using, an estimating software, you're using, data, whatever, all your different programs. So we have an enterprise platform that brings all that together, helps it all communicate and cross over so that you have one single data entry point. So you don't have to enter your clients, and jobs into all these different areas. It all syncs up. So you get them, you bring them in, you put them in your CRM, that automatically goes to QuickBooks, automatically goes to your estimating software, automatically goes to your project management software. It just crosses over into everything. And then it also helps you downloads and backs up the data so that you own your data, and all of that on a private cloud server that's not Amazon, that's not Microsoft, that's not, big companies that can shut you down and deplatform you and lock you in, which is what they do. Their whole thing is to get you on their servers in the cloud and put you under contract so you can never escape. Now at small levels, that's not important, but at bigger levels, and especially if you're a faith-based institution, you're never going to own your data, and you could be shut down at any time. So, that's what that's all about.
Well, that's great.
Yeah, that's amazing.
What-
There's like 27 different things we can talk about.
It's going in circles forever.
My thing is, how do you get more than 24 hours in a day? Because there's no way. The things you're doing, and that's probably goes back to that coaching is the way you structure your team.
Yeah, I'm a leader, delegator, motivator, and Tony will tell you that's my number one thing that I coach people and help people become, is you want to become the investor over everything versus the operator, owner. You want to be the investor, and you want to leverage the talents, gifts, and abilities of others. And, so that's how it works. I mean, I'm not in any given thing, but I'm over all of it, so I'm delegating stuff out, leading, delegating, motivating, everybody in the different teams at all the different levels. And I'm the intellectual capital, for all these things. So, that's kind of how that works. And the other thing is I have zero backlog. Tony will tell you, I respond to everything immediately.
Yeah,
I mean,
he
you
said
reach
that.
out.
I actually said that before we got on. Yeah, he's like Rich Dad from Rich Dad Poor Dad.
Exactly.
Yeah, he must have read that book. He's like, I'm going to be this rich dad. I want to be the rich
I'm
dad.
gonna go rich dad.
That's where it
Oh,
started.
Jesus,
So I
thanks,
tell
man.
people that, that was the first instrumental book in my business career was Rich Dad, Poor Dad. I read some other ones in terms of management, leadership, and all that. But from an entrepreneurial standpoint, as an investor, that was the most pivotal book I ever read. And when I read it, like most people they want to be Robert Kiyosaki, right? They want to do what he did and go do real estate. What I got out of the book was I wanted to be Rich Dad. I wanted to be the guy that was over everything. Everybody was coming to me with deals and opportunities. I was investing, creating businesses, and using that to invest into their assets. So that's exactly what I did. I said, I want to be Rich Dad. And so I went out and did it. And, that was huge for me. And that, like most people that I talk to, pretty much everybody I talk to, nobody ever looked at the book from that perspective.
That's crazy. Yeah, it is very, yeah. So, it's crazy how quickly now once you're laying it out that, yeah, you can foresee that's what you're doing. Right. But yeah,
Exactly.
I don't think when I looked at it, I was the same way. Wanted to be Robert Kiyosaki, like you say.
Yeah.
You don't really look at it from that perspective. But I will tell you that, as you're delegating and writing down processes for people, it is extremely addictive. You just want to get every single solitary thing off your plate. Once you start relieving things from your plate as a business owner and you document that process and you can hand it off to somebody, you get to a point where you're like, well, what am I doing anymore? I don't have anything to do. Might as well go home. I'll come in for an hour and I'll go home. I got nothing to do.
And that's the point. So as a leader, your job is to replace yourself. So the organization should run better without you than it does with you. You should actually be a cog in the wheel now, that blocks progress. That's the true mark of a great leader, how well your team does without you. And if you're ever in a position as a leader where your team can't function without you, you haven't done your job. You're not a great leader. So that's what you always have to look at. If you want to be a great leader, how can I replace myself in this business to where I don't need to be here and everybody contributes, everybody in this organization runs better without me? And then, once you're at that level, that's when greatness happens and you can go start a tech company. You can go develop real estate. You can go travel around the world. I mean, you can do all these different things because you have systems, people, process, and systems in place, for that business to grow and thrive without you. And then you're the leader. You're checking in, you're overseeing, you're the brain trust, and you're leading, you're delegating, and you're motivating. And your team does it together and with you, for you, but together. And that's when true greatness happens as a leader and as a company.
Yeah, I would agree with that. And it gives the team ownership of what they're doing. So it gives them something when you're, judging and kind of going through what they've achieved. You can go and say, here's where you were here. Here's where you are now. Look at how much you've gained in that time frame, and how successful you've become. And it just kind of steamrolls from there. They want to become more successful. And,
that impacts the overall company. That, the better we do together, the better everybody does.
It certainly does give them, it's empowering. So,
yeah. Well, Greg, this has been very insightful. We really appreciate you taking the time to come and sit down and talk to us for a little bit. I've thoroughly enjoyed it. And I think we could probably talk for another 5 hours because you do so many different things. I get caught in one thing, then want to jump back to another.
yes.
But,
well, the next one we'll have to do live.
Us.
I'll be rolling through the area again when my daughter goes back to school, probably the end of August, middle to end of August. So I'll connect with you. Maybe we can do one live in the office there with you guys.
Fantastic, man. We would look forward to it.
Amazing.
Need another microphone though.
We got one.
We got it.
Cool.
Yeah, it's
I'll
right
jump
over the
right
side,
in.
Greg. We're ready to roll.
Here,
It's
let
already
me
set
pull
up
it
for
in
you.
here.
It's in and ready to roll. It's got the headphones sitting here for you.
And I'm working
Awesome.
on your nameplate right now.
Nameplate is going to be there when you sit down. Well, hey, Greg, thanks so much.
Greg,
Thanks
thank you.
again for joining us. And you guys, thanks for listening. Have a great day.